What's going on, everybody? Welcome to New Money, a podcast about the future of investing. This is a new show about all of the new investment vehicles and opportunities that are coming online, not just for the wealthy, for actually everyday investors. There are an explosion of new places where you can put your money to see it grow. Some of those will be, I think, very beneficial and help people, help them retire later in life, and some of them might be flops. So every episode, we're going to analyze and discuss a new investment opportunity for everyday people. And we're going to talk about the upsides and the downsides, whether or not we're going to put our own money into these vehicles, and how we see them kind of playing out over time. So welcome to the show. Thanks for listening. Mike, I don't know if you want to say hello. Mike is the co-host. I'm David.
Hey there.
So I thought this episode, since we're kind of just kicking off, me and Mike have been discussing just a lot of changes that are happening in the financial world. You've probably heard about blockchain. You've probably heard about Acorns or Robinhood and some of these apps. And it's just a really exciting time to be an investor. But I thought, just since this is the first show, before we dig into investing, we could just talk quick about some of the background that we have, and then we can kind of get into today's episode, Rally Road. Do you want me to kick off? Do you want to kick off with some of your background?
Why don't you just keep it rolling, man?
Okay, great. So just for context, I'm 28. I started a company out of college called Death to the Stock Photo, which is essentially a media agency business, but brands pay a subscription for access to the media that we produce. So it's a stock photography and video house. I've been doing that for about 6 years, and I've always been interested in investing. In 2008, got really lucky. I put money into the market in 2008, right after the crash, purely by timing. And so it's been a great market since then. But that early win, both in starting a business and also investing at that time, really through luck, I think gave me kind of the investor bug. Although I remember even in high school, I think as a sophomore, being really interested in my finance classes. But at the same time, I don't feel like I'm a finance nerd. Like, I'm not great with numbers, if I'm honest. I'm very interested in trends. And I'm very interested in just analyzing kind of what's going on culturally in the shifts that are happening. So while I may not be, such a diligent sort of numbers person, hopefully I can be a voice just about the trends that I'm seeing in technology and some of the opportunities that are becoming available, as somebody, who maybe could be an example of someone who likes investing, even if I'm not on Wall Street, et cetera. So I guess that's my background. Mike, do you want to start with maybe how you got interested in finance or investing? When did it start for you?
So there's a story that goes around my family that, so my aunt was a seamstress, and she did work hourly for a client, and it was a pretty high dollar. It was I think she was the Saudi Arabian queen or something like that, and she was making a garment for her, and she told me she was paid hourly, and I was like, well, just work really slow. So from a very young age, the numbers of things made sense to me. So I've always been a kind of a poly nerd. Math was always my thing, came very easily. So that led to a degree in accounting, spent some time in corporate finance, about a decade there, and didn't find it super fulfilling. So I started to venture out into more of the small business entrepreneur world. Have been there for, I'd say, the last 5 or so years. Now I just help small businesses who aren't great with their numbers get a better handle of where they are and where they want to go. Obviously, that has a lot to do with the numbers. So as far as my kind of contribution in this show, I'm going to come from things more from a kind of less emotional or less culturally driven.
Mm-hmm.
And I'm going to come more from, what do the numbers look like and that's kind of my strong suit. So I think it's going to be a cool dynamic of you're going to get a balance of, someone who has a better pulse on what culturally is going on, and someone who is probably on the very early end of the like the adoption curve. And I would kind of put myself probably on like the tail end of the early adopter curve. So I'm usually a little bit later to things than you are on that sense. But yeah, I think it's going to be a cool dynamic to see how that plays out as we go through, all of these new opportunities that have never been accessible to the average person. It's just going to see how it all plays out.
For sure. And yeah, so just to give you, the listener or the person who's watching on YouTube, really the premise of the show started because there's two huge changes that are happening. And both of them are very fascinating. The first is that people who don't traditionally invest in the stock market or just through investment vehicles, I think are coming online for the first time and actually getting interested in investing. And this has really been driven by Robinhood and the iPhone and being able to bank through your phone and trade stocks through your phone. Like actually just investing as an idea is becoming a lot more accessible to people. And so I think on one hand, we've got this huge wave of new people coming online to invest their dollars. And it's not like they're super high net worth. It's just everyday people are going to start investing more easily because the tools are becoming more available that allow them to do that. There's even been some law changes, et cetera, that it's going to facilitate that. The second thing that's happening that's really fascinating is there's been a lot of innovation on investment vehicles. And that's the products that we're going to be talking about in this show. Every episode is where is a new place that you can put your money and earn a return on it that wasn't previously available to anybody, a decade ago or more. So I think it's this convergence of more people than ever becoming investors for the first time, and using these iPhone applications, et cetera, to do that investing. And then just the sheer number of untested new financial instruments that are available, like today's episode that I'm really excited to talk about, Rally Road. I just think we want to make sure that people understand, one, those trends, but also that if you're somebody even with $100 a month, $50 a month less, you can become an investor. And there's a lot of very interesting places and products that may yield a return for you, over the long run. And we want to explore whether or not these are going to be viable instruments. We're going to put our own money into some of them. And if we do, we'll talk about that. But with that pitch, I think we should talk about today's product, Rally Road. I think we have to give a disclaimer here, though, Mike. So I don't know if you want to give a disclaimer about us not being, we're not giving you financial advice here.
I mean, just in general, we're not giving you professional advice. This is our own opinion. We're just reviewing things as two normal people. Do not think of us as pros. Do your own research. And if you think we're giving investment advice, we are not.
Okay, great. Well, I'm going to start with thank you. And we'll do that every episode, so deal with it. We're going to start with today's product, today's new investment opportunity. It's called Rally Road. And I heard about Rally Road through an investor that I like to follow named Howard Lindzen. And the quick background about this product is that there used to be, or I think there actually continues to be, a car show and a car auction that happens, I think, in Texas every year. And thousands of people gather to watch old classic cars get auctioned off to the highest bidder. And the reason that so many people typically attend this event is there's just a lot of car enthusiasts. We all get that. We all know that, there's a lot of people who just have a hobby of loving classic cars, fixing up classic cars. And in the past, only a few people could buy them. They'd auction off for $1 million. So all these people would gather at this event. Thousands of people would be watching. Thousands of people would be loving classic cars. And a few wealthy people would, lead these auctions and purchase the cars that were available. And so the people who started this company, Rally Road, which is an iPhone app that you can download today, saw what was going on and said, wouldn't it be cool if instead of just a few millionaires buying these classic cars, we empowered all of these enthusiasts to also participate in that? What if we purchase classic cars and allow people to buy fractional ownership of the car and hold it like an investment? What if a car is something that you can buy into and actually gain a return over time if that car goes up in value? And so I think it's a really neat idea. Basically, the application they built allows you to do just that. You can purchase a fractional share of a classic car. And if that car goes up in value over time, you can get a return, sort of like buying a stock. So I love the founding story of that. I love the idea that here's an asset that only a few people could buy, and now many people can purchase it. And I think that's even, it just goes to the heart of the show and what you were trying to explain in the beginning, that new things are becoming available to everyday people to put their money into. Mike, I don't know if you want to add anything about like structurally how that process works. But yeah, what's your take on that?
So just to give a little more context, I've got their site pulled up right now. There's currently one offering available that's 60% or so funded, and they're selling shares of that fractional. I'm not even going to say what kind of a car. It's a '92 Lancia Delta Martini 5. They're estimating that value at around $165,000, and you can buy a share of it for $55. So something that was never available to an average person now, whether it's just because you're into cars or you see it as a potential major investment area for you, you can buy into it for as little as $55, which is amazing. You talk about that car show. Now all of these people who are watching along can feel like they're along for that ride. And if that's your thing, this is a great chance for you to feel like
you're a part of something.
Investor probably has felt all along. The only other things I'd add is from what I saw, it sounds like they're starting with just these luxury custom vintage automobiles. But the thing that has me even more excited is they're planning on opening this up to a lot of different kinds of alternative asset classes. A couple of the things they had mentioned was political, sports, and celebrity memorabilia. So it's kind of just opening that up to a lot more different interest groups. And that just kind of made my head explode as I was driving around thinking about this, I'm looking at buildings, I'm looking at like any asset. In 20 years, you may be able to buy a fractional share of that building down the road or the open land. It's just, I think this is opening up a market or a industry that will be very exciting because none of us could ever participate in anything like this in the past.
Yeah, and it's based around passions too. I like that memorabilia makes sense as a next step because it's a similar group of people who are passionate about a sport or a certain celebrity, I guess, and you can buy into that passion that you have. But the key to the show is you can make a return, right? And so let me jump into my thesis here that I think is really interesting and caught my eye about Rally Road. Yes, it's nice to buy a piece of a car because maybe you love automobiles, you're into the vintage aspect, but I think you can make real money on them. And the trend that I see that makes that really interesting is, so we're heading to a world of automation. We're heading into a world where you're going to summon a car. It's going to be electric. It's going to be autonomous, just like an Uber. And you're going to get in and you're not going to drive. And there's, statistics about how, teens less and less are getting their driver's licenses. So I think we're heading to a world that is both electric and autonomous. So to me, there's a real luxury in the future of owning a, 68 Jaguar that still uses gasoline, if you can believe that you have to drive yourself to get around in. I think people will pay top dollar to own rare vintage cars that use gasoline that they drive themselves. And so I think actually from a trend perspective, I actually think the value of a automobile goes up the less we have to sort of use them in everyday life. Like it almost becomes more precious, more luxurious, more something that the elite want for themselves is to like drive these gas guzzling vehicles that destroy the environment, but have that classic touch of cool. And the last thing I want to add to that is one thing Rally Road has done is they attach the story of the vehicle as well to the investment. And so when you're researching as a potential investor in these cars, you also can get a bit of history, who used to drive it, what's like the history of the model. And I think that also points to potentially why in the future you might buy in, let's say, you spend $100, you buy fractional ownership, the car's worth $100,000. In 10 years, in 20 years, maybe it's worth $1 million. And that's how you actually gain value in these shares of the car. But I think that to me is the trend that makes me think that it's a viable investment. What's your take on that?
Yeah, I mean, I echo what you're saying there about at some point, this will be a nostalgic kind of asset where, you're really tapping into generations past. But what you meant, one of the things you mentioned was how you make money. So I think it's important to kind of go through some of the mechanics, because that's one thing I dug into. I was kind of curious, like, so who am I going to sell these shares to down the road? Like, how is this going to increase in value? And the way it works is, once they open an offering for those fractional, like initial offering of the shares, they close the window of selling any of them for 90 days. So say you buy in, they close the offering, you're going to hold those shares for at least 90 days. And then the interesting thing that they do is, rather than having just this open market where, like, if you think of a share of Apple, you can go in, whenever the markets are open, which is almost every day of the normal week, and buy or sell a share. What they do is, because there isn't such, great liquidity in that market for these assets, what they do is they only open it up once a month for activity. So once you own that share, you sit out your 90 days and wait. You could potentially sell that in an open market setting once a month. And if there's a buyer on the other side that agrees to the price you want to sell it, you sell it and you could make money. So that's kind of the mechanics of the market, specifically around like the transactional level of, this is when you buy, this is when you sell, and that side. So from that standpoint, that's how that works. The only other thing that kind of stuck out to me was, that we haven't talked about, is that these guys actually invest in the vehicles along with you. So I think it's up to 10% of the value of the car that they're allowed to buy alongside. And I think that aligns them well with the incentives that, you as an investor would have, is, they want the value of this thing to go up as well. So they're not just a market maker. They also are incentivized to own and see the value appreciate as well, which I thought was one of the things that when I was going into it, I was like, I'm hoping that they're incentivized for this thing to go up as well. And, they are. So.
Yeah, no, I'm so glad you brought that up, both on how you can gain liquidity over your investment, which is really how long do I have to wait before I can sell this off? Let's say the car doubles in value in 5 years. Well, can I liquidate and get a return on that investment? And then also, I think you brought something up that I think we'll continue to cover in the show, which is the incentives of the platform, the business model of the platform, and how does that align with investor interests, everyday investors on the platform. So I'm really glad both those points, I think, are key to sort of starting to understand this new world of investment vehicles. So one thing that sparked for me a little bit is that what's interesting, obviously, about this is that many people can own shares in a car. But I also wonder at what point individuals will try to buy out, the entire investment to own it. And it makes me think of someone like a Jerry Seinfeld or a Jay Leno. These are car fanatics, and they might pay a premium to these fractional owners of these cars because they want to own it for themselves. And so I actually think that potentially, you mentioned market makers. Potentially there's these real car enthusiasts that do buy these cars back from the crowd. But that's good. It gives the investors liquidity. It gives them return. So I've been thinking, from a trend perspective, you've already got people like Jerry Seinfeld, who owns 300 plus cars. And another thing that came to mind too was Antique Roadshow. You've already got this whole, group of people who loves these antiques, and we know that we like to look back into history and purchase these goods for higher prices. I imagine there's this like, effect that happens, this vortex where a few individuals of high net worth want to vortex this stuff up, but it's great because the value has been provided to everybody involved, along the way.
Yeah, typically, if you think of like a traditional stock exchange, if there's a company buyout and say the company's trading at $10 a share, typically when that happens, there's a pretty big premium that the buying company is going to pay. So let's say you buy these shares for, $100, and, 5 years down the road, a Jerry Seinfeld comes along and, he wants to buy them. Typically it's got to be a pretty compelling offer. So that, that's typically going to benefit the shareholder very well. And the other thing that I was thinking about with the Antique Roadshow is I can imagine a world where, you're just sitting on the couch watching this, Mecum car auction or this Antique Roadshow, and you just can hop on your phone and as you're watching it, just buy this fractional share of whatever it is.
Totally.
It's just my mind exploded of all the different avenues that, that are going to be available. And I think that's got me more excited than anything when you talk about these alternative assets is when you start to make it seamless to the way people are already like observing these things happening.
Yeah. In person as well. You could be at the auction with your phone out in person, and also your bid is through the phone.
Yeah.
And attached to your bank account, So I think there's some really interesting stuff there. So one little section, and I think we can kind of wrap here, is, one little section we want to get into is just like, what's going on generally around the market, if there's anything notable happening. And so I just want to kind of call out here at the end of this, today's episode with this product, something I saw that was sort of interesting in the news with Robinhood, which if you haven't heard of it, Robinhood is an app that you can download to trade stocks free. And they've definitely been continuing to innovate in the fintech sector. They had a pretty big announcement yesterday that has been kind of blowing people's minds, and they immediately got some potential regulatory pushback. So I can pull that up. I don't know if you have a good read on that, what the offer was and what the pushback was, or I can pull it up and we can discuss it that way.
Yeah, let me pull it up.
Yeah. So, essentially what I sort of understood is that they, Robinhood, the application was promising, not only can you sort of like trade stocks through the application, but you can also open a savings account through their app. And when you open a savings account with them, they had an offer that said that you get 3% earnings on that savings, just for leaving it in that account. And it seemed like they got into some regulatory trouble. And I think that's an interesting theme, I guess, just to bring up in the show is that, with these innovations, we're going to see a lot of regulatory stuff happening as well. And I think they got in some regulatory trouble because there's something about the intent of that savings, whether it's for savings or for investing in securities, that the Security Commission Exchange had some issue with. So I need to kind of read into this more. It's new. It just kind of came out this morning.
I think just from the average person's, without getting too technical on what the problem with it is the average person is like, it's about time. I remember, I can't remember exactly why, but I found one of the old deposit books from my childhood of like a checking account or savings account that I had. And I saw there was 5 or 6% interest. And I'm like, our entire lives, this generation's entire lives has been in this depressed state of returns on savings accounts. And it's something that we've never experienced of those interest rates actually rising and getting a return on your money. So I think most of us are pretty disenchanted with the big bank world and are excited to see someone sticking up for us, if you want to call it that, and actually incentivizing us to save or to have money in a savings account. So
yeah, I saw it as a bold move, sort of like an Uber, where they entered the market knowingly having some potential issues around the law, but they also understand that consumers are on their side, which is what you just brought up. It looks good enough on the consumer side that they might be able to get like community support to ensure that this continues without too much regulatory trouble. But I think it's a good example of just like, some other stuff that's happening in the market, and that, with these investment vehicles, these are new territories from a regulation standpoint. So I think we will probably continue to discuss and see some issues like this, popping up with these different products. So, that was fun. I'm really excited to dive in. We have new products every single show that are like Rally Road, in that they're a place that you can put your money, even if it's a small amount. The show is for kind of the everyday investor. These are the things that we see popping up, the trends we see popping up that are interesting. Over time, we might start putting some money ourselves into some of these vehicles, just so we can really gauge, how good of an investment is this? And that'll let us hopefully help other people who are kind of looking at this information parse out where is the best place to start thinking about potentially putting some investments in. But again, these are just ideas and not investment advice. But yeah, that was fun. I'm looking forward. We have a great list of products lined up for these shows. If you're listening on the podcast, we also have a YouTube channel where once we get the tech working perfectly, you'll be able to see everything on screen as well as our faces if you want to see our faces. Or you can, stick around on the podcast, of course, subscribe, review, etc. Mike, anything else you want to sign off with?
Just at a glance, man, is this something you think you'd be interested in getting into at some point?
Yeah, it's a good question. Yes, I don't have the classic car bug. So I'm not somebody who has that passion. I really wanted to explore more about, I think one thing we didn't get to that like piques my interest is like luxury and storytelling. So actually, like my kind of media background, the thing that I like about Rally Road is that they understand that they need to tell a compelling story about each unique car, and that adds to the ownership and the interest. So like, I like it not because I care about cars, but because I like the idea of how do you build sort of like luxury and a story around these investments. So I think I will. I think it seems easy enough through the app to put money in that I'd love to see how it does. I think my thesis being that gasoline becomes more attractive as we use it less, as well as driving, makes me think that there's a good long-term potential there. So I say yes, I likely will put some money in, but not for the reason that their core user will put money in. How about you?
Yeah, I think I share the fact that I'm not necessarily a car guy. But I think as far as, because they are planning on extending this offering into different types of asset classes, I think there's some value in understanding the platform when a better opportunity may come along, or a different opportunity may come along. So just to get the user experience, I may try it. It's not something I would allocate by any stretch of the imagination a large share of like an investment pool of money that I had. I may buy a share or two in a car or two, and just to understand the experience and get a little diversity, but it's not something that I would at this point go crazy with. So
Yeah, I think the other thing I'd look to understand is I wonder what the time, something else we need to think about is the time frame on this, and like, is there actually, like, let's say Rally Road as an app upscales and suddenly 1 million people are using it.
right.
Have you actually lost ground on a potential entry point now because it's actually, less known? I'm not sure. I need to think about that more, but it would be interesting to also think about whether timing, how timing plays into it.
Yeah, I think, if it was me, it wouldn't be like a short-term trade. Like I
Yeah.
wouldn't buy
Yeah.
something today and then 90 days expect to have seen that thing appreciate, unless it was kind of an unusual circumstance. So, if it was me, I'd probably see a time horizon of at least a year or two. But again, it's a new platform. Who knows what happens? I mean, So I think
Yeah.
that's a risk,
Yeah. I think we're
I'm not
both like, invest just to sort of discover, invest to see what it's about.
just to get your toes wet. I mean,
Yep. For sure.
that's a good enough
Awesome. Yeah. Awesome. All right. Well, thanks so much for tuning in on YouTube or on the podcast. And we will be back again with another product and another similar breakdown. Thanks.
Thanks.